Perfect. Okay. Hello, everyone. How's it going? What's up? You notice anything different? Got a big whiteboard behind me. That's what's different. How's everyone doing today? God bless you. If you're here, welcome. Say hello, comment below. Let me know that you're here. It's Saturday, December 28th. We got a couple days left and then 2019 is done. So my question to you today is, what is your financial plan going into 2020? Okay, what's your financial outlook? What's going to be your financial perspective? What are you going to be learning? What are you going to be earning? What are you going to be doing? Comment below. If you want me to give you a call, I think I'm going to try and take some phone calls today maybe. So if you want me to give you a call, email me your phone number at denzel@buildertocontributor.com if you have a urgent question, or if you're brand new to the channel, welcome. If you have been watching the channel for some time and you're like on the fence about this, any of the things that I teach on here, the strategies, things like that, go ahead and send me an email. I'm going to have my a window open for my email so I can see who comes in. Like I said, you can email me at denzel@buildertocontributor.com and just put in the email your name, phone number, and somewhere in this video I'll give you a call, and we'll put up a strategy, maybe some numbers, who knows, we'll run a scenario and let me know what you think. Hello to Jesus, Nicole, Christian, how you doing? Says Happy New Year. Happy New Year to you as well. Robertson, how you doing? RJ, how's it going? Selvin, how's it going? Edna, Moore, hello, hello. We got a nice group of people in the house already. Wonderful, wonderful. All right, so a couple things I want to share with you is just letting you know some of the different things that I'm working on, and then answering some of your questions. I get a lot of questions that come in. People fill out contact forms, and you have basic questions like, what do I sell? What's my program? Things like that. So I wanted to lay out the details of what we do on this channel for all the people that are new, and the current programs that I have running right now, the current offers, and then what things are going to look like in 2020. And for everyone else that you're like loyal subscriber, you're a client, I have some really cool things in store for you that I would like to show you on my computer. I figured out how to do a screen share and go live, so I'm getting even more tech savvy out here. So I'm gonna switch the camera to my laptop in a bit, and I'm gonna show all of my clients what I've been working on. You guys are gonna freaking love this. It's gonna increase engagement. You're gonna learn more stuff outside of what I know. I've been collaborating and building relationships with people that are experts in other fields that runs parallel with velocity banking, with infinite banking. So it's gonna really help you, build the plan that you want. So let's go into it real brief. On this channel, we cover the velocity banking concept, the infinite banking concept, and kingdom authority. These three major concepts is what I like to focus on most. Helps you pay off all your debt really fast, builds your credit score, increases cash flow, lowers expenses, starts to create this legacy plan, or what I like to call a kingdom for your life. In order for us to do that, we need to know our four major numbers, people. We need to know what you make monthly. What is your monthly net income? What are you bringing in per month? And then what is going out? Expenses. Expenses means everything and anything that leaves your checking account to either pay a bill, a debt, living, an investment, savings, whatever it is. All of that is classified. Tithing, giving, all of that is classified as an expense. If it leaves you, it is an expense, okay? So you need to know that. And then you need to know your total debt number, okay? Now, the way I like your debts to be displayed when you're working with me is just like this, okay? I want to know what the balance owed on the debt is. So I want to know balance owed. Then I want to know what the monthly minimum payment is. What's that monthly minimum payment? Not what are you overpaying. I just want to know what the monthly minimum payment is. And then the interest rate. What's the current interest rate? And then if we're dealing with amortized debts, I would like to know the payment schedule as well. I want to determine how much total interest is on the table. All right, so I want to see the total amount of interest that is at stake, right? So if, let's just say you have $500,000 in debt, and that consists of a property, car loans, student loans, credit cards, the whole nine, all mixed up. You want to write down all the balances that are owed, right? Current balances, all the monthly payments, the interest rates, and then for the amortized debts, get the payment schedule for your car, your mortgage. Let's see, and then what we can do is we can calculate the total amount of interest that you'll pay if you do nothing but continue to pay your monthly bills, right? So once I get that total interest number, that's going to help me create a velocity banking strategy to see how much debt can I leverage, or how much good debt can I leverage to eliminate all of this interest that is at stake, right? And then what we do to back up the plan is we compare it to the debt snowball strategy, okay? So we'll write your plan up together on the phone, and then sometimes I like to make videos on certain scenarios to share with everyone. But with the debt snowball method, we would run the numbers and see, okay, what would this look like if I took all my extra cash flow per month, right? All the money that's left over each and every month. How fast could I get out of debt if I was doing the debt snowball? So let's just say $500,000 in debt. Doing debt snowball, you'll be debt-free in 13 years, right? It's like that. There's no debating that, right? Let's just say that's what it is. And you save X amount of dollars in interest. Cool. Well, with velocity banking, all we need to do is beat 13 years. All I have to do to beat debt snowball is take your cash flow per month, times it by 12, I get a number, and that is my benchmark to say, okay, however much debt I leverage in a year has to be more than what I cash flow in a year so that I can stay ahead of the debt snowball timeline. So what ends up happening is we're doing the concept of velocity banking, and we run the numbers, and it says we'll be debt-free in 6 years. Could go faster with other strategies that I like to implement, but let's just say that's the case. Then we just simply say, okay, well, now how do I go about doing that? What is the debt tool that you're saying that, what is this good debt? So coming over here, all the debt tools, or they're also called debt weapons, right? People call it that. Debt tools, we have what's called a personal unsecured line of credit, a checking line of credit. We have secured lines of credit, credit cards, HELOCs, home equity line of credit in the first and second position. And then we have high cash value life insurance, or that's going into the infinite banking, also known as whole life insurance. Okay, these are our debt tools that we would leverage in addition to your cash flow to simply go faster than debt snowball. In addition to going faster than debt snowball, we're also keeping all of your cash flow in the process. Okay, so what that means is I can use these debts, the bank's money, to my advantage, pay off this bad debt, save a ton of money over here on interest, which would speed up the overall principal debt that I owe. And then over the same period of time, the 6 years, and the first 6 years of debt snowball, as I'm wiping out all this debt from the institutions, the car dealerships, the student loans, all those companies, right? And I'm saving a bunch of money on interest. I am also going to be increasing my capital with these different debt tools. So periodically, I can say every year at best, or I can go as fast as every 6 months or every 3 to 6 months, I gradually increase my credit lines via the amount of debt I pretty much wipe out per year. So imagine taking this 500K that's bad debt and turning it all into good debt, putting it over here. And then finally, in addition to going faster and keeping all your cash flow in the process, we also save time on when it comes to investing your money, right? So after 6 years, let's say I become debt-free, I don't have to wait to save money because I would have had the 500K right here in the form of HELOCs, credit cards, credit lines, high cash value life insurance policies. I got all those debt tools, 500K got shifted over here, kept all my cash flow in the process. How? It's right here. It's in the capital. It's in the leveraged debt that you're going to be using. And then now, since I don't have to technically save money per month, I can simply take a big, chunk of money, lump sum of money, and throw it towards an investment and watch that thing multiply. Okay? So the overall strategy, how I like to work with people, is I start you off with velocity banking. I want to pay off your debt. I want to build credit. I want to increase cash flow, capital. Then transition to infinite banking, where we basically save money tax-free and use money tax-free. And then finally over to the third part, which is kingdom authority, 10xing your income, investing in real estate, being a business owner, checking out the stock market, whatever fits you best, whatever you like most, that you are genuinely interested in learning, you could 10x. And my thoughts behind money when I'm building it is I only save for growth. So I save money for growth. I only invest money to multiply. Okay? Very, very important. You want to make sure you really understand the definition of the word invest. Okay? Because there's a lot of meanings behind it. My personal meaning behind investment, I correlate it to multiplication. I do not want to put my money in, let's say, a classified investment that isn't going to multiply. If I'm going to get a simple rate of return of 5%, 7%, 8%, 10%, to me that's not an investment. To me that is simply growing money. To me that's saving. I could do that in my cash value life insurance policy. I can do that with velocity banking. I can do that, with a qualified retirement account. That to me is saving money. Investing is being able to put $1 in and get 10 back. Put $1 million in, get 10 million back. over a much shorter period of time. Not exactly like a rate of return, but more so like literally I have this 10x mindset behind the investment. It's flexible. It's not, the money's not exactly locked up, right? So if I'm saving money for growth, I don't mind maybe locking up the money, putting it off to the side, set and forget type of mindset. But if I'm investing, this requires activity, right? For me. Now I know people are going to define it differently, but just for me, while I'm starting out, this is how I want to be able to separate the two. So, with that being said, let's go into some Q&A. Let's see who's got some questions. Let me scroll this thing back up because you guys are commenting. Hello, Ryan, how you doing? Happy holidays. Django, just found you this week. Incredible info, new fan. Wonderful, glad to have you here. Got plenty of videos, so you're gonna have to backtrack, work your way up so you know what the heck is going on this channel. Ronald, to get out of debt, that's the financial plan. Love it. Love it. Get out of debt. I mean, I'm sure you guys have been killing it if you're the Ronald that I'm thinking of, because I have a couple of Ronald clients, but there's one Ronald that's been with me since like day one. Him and his wife, man, they've been killing it. They've been killing it. Billy, how are you? Welcome. Denzel has a ton of videos. Check them out. Sure do. Sure do. Let's see. I fully understand velocity banking, but now trying to figure out infinite banking. Yes, I'm trying to figure out infinite banking too. I mean, I'm constantly learning the thing. I feel like the more I talk about it, the more I work with different policies and cases, it's like I'm always learning something new about it. And, you know, the industry is changing as well. Things change all the time. Money markets, financial industries, all of it changes. So it can be quite tough. But when you get the general principles that don't change, if you can get the idea of being able to literally put money in an account that doesn't charge you tax, and it can grow tax-free, and I can borrow this money that I put in there, I can borrow against it and have it still grow, and then use this for something else and get two uses out of it. If that lands for you, you're on the right path. But if your mindset goes into life insurance is too expensive, it's stupid, it doesn't make sense, then, you know, it's not for you. It's just you tend to shut down. And that's like 90% of the population. It's because of the way you've been taught. That's all it is. It's simply the way you've been taught. You've been taught to buy term and invest the difference. And again, investment. What are they talking about when they say invest the difference? What? The difference of cash flow? The difference between what I would pay on a whole life versus a term? What do they mean by that? And then where am I putting that money? Am I locking it up and it's just going to grow at a what rate of return? Where I got to pay taxes and fees on it, and I get killed, right? In terms of the growth. So it's this It's this new financial outlook that you're going to have to adopt if you want to get ahead in your life. Okay. Let's see, I just don't get why someone would choose something other than whole life. Very simple. Term life is cheaper than whole life. That's the conversation. That's the sales pitch. Term life, by factual statement, is cheaper than whole life. So you that are learning infinite banking, you're like, why would I pay extra if I can pay less for the same death benefit, if not get more? And then now, since you have this new education, you can say, well, although with whole life, I pay more upfront now. My goodness, my grammar, upfront. Pay upfront now for a limited time, right? This is super cool. So I'm stealing from term life, how the sales agents sell it. I'm stealing from what they say. Ready? Whole life insurance. I'm gonna pay more up front now, but for a limited time. Let's say 7 years, right? During those 7 years, what they don't know is with whole life, I can add term life. So I can get what they get and throw it in my term life and pay that term life for just 7 years, okay? With the addition of minimizing this expense of whole life insurance, right? So now we've got two different costs. We've got the term life cost and the whole life cost. I'm putting it together. The goal is to minimize your whole life expense number, maximize the amount of term life we could get with the amount of dollars that the individual is putting in. Let's just say 10,000, right? 10,000. If I'm putting 10K into this policy, I want 1,000 going towards whole life, and the other 9,000 is going to go towards this term life and something called PUA, paid up additions, right? So the 9K goes in here in this PUA rider, which I have set up for 7 years, let's say. And there's term life, also known as OYT, 1 year term insurance, right? And then I fund this for the 7 years. So I'm going to pay for whole life for 7 years. After the 7th year, we can do something called a reduced paid up, right? After 7 years, do what's called a reduced paid up, and then I get rid of the whole life expense, that 1K, gone. I also get rid of this term life, so that expense, gone. And I'm left with that 9K times 7 years plus interest earnings as a nice line of credit. And I keep the death benefit my whole life. So I paid basically what they're paying, the term life. Instead of investing the difference, I kept it in there. And I managed to keep the death benefit and keep every single dollar that ever went into the policy. It all comes back to me at some point, right? Typically within 7 years, I'll break even, right? Within 7 years, could happen as early as the 4th year, the 5th, the 6th. No later than 7 do we want to wait that long. But the money breaks even, and now I keep the death benefit for my whole life. And because this money has been growing in the PUA, which is also the cash value, as this grows, the cash value, so does the death benefit. So for those people that are paying term life while they're young, or even while they're older, you, on the other hand, you're doing the same thing they're doing, but you get to keep the thing forever, and it grows for life. So if anything happens to you, boom, goes to the family. While you're living, you use the thing to create more money, more cash flow. So that's a quick little thing on that. Let's see. Another question. Django says, if you educate yourself a little, you maximize your gains. That's very true. Very true. Combined velocity banking plus infinite banking gets complicated though. The concept is still seeping in. Yes, it is complicated because I don't think anyone on YouTube is talking about velocity banking and infinite banking together. I don't think anyone is talking about it. The only person I think that talks about it, the name of his channel is Oregon Cashflow Pro. He uses a term called dynamic banking. You can check that out. I watched some of his content. Pretty interesting of how he uses debt to basically fund a policy. It's the same thing that I'm doing, but I think he's a little more aggressive with it. He's a little more aggressive with it. But very, very interesting. Let's see. Question. Let's see. Africa. I don't have much monthly debt, bills, etc. Don't have a car, credit card payments. My husband and I want to buy a home. What would you do to start the process of velocity banking to pay off the house quickly? So let me pretend to be in their shoes. Let's say I am a husband, I have a wife, and they said they don't really have debt. They want to get a home, so you got to qualify, you got to run your credit, right? I think before I get the home, I want to see if I can maybe get one of these debt tools and just have it positioned so that when I do get the property, I can then use that debt tool to start chunking on the thing. So if they have no other desire but to buy a home, so let's say they're not on this mindset here. Let's say they're not there yet. 10x, real estate, entrepreneur, business owner, create a bunch of wealth. Let's say they're just not there. And they're just saying, listen, I just want my dream home, just want the house. How do I get the house and then pay the house off in 5 to 7 years? Show me that. If you have existing capital, maybe we could secure it, right? So instead of just throwing it as a down payment, maybe we could secure it, use that as a chunk, as a down payment on your home, and then boom, you start velocity banking. You now have a line of credit. Also, if you have existing capital, maybe we could start a policy and then borrow from the policy and use that as a down payment and basically finance your mortgage through your own tax-free bank. That's an option. Another one is simply get an unsecured line of credit way ahead, way in advance. Let's say you don't want to buy that home till the end of 2020 or the end of like 2 years down the road. You know you're going to get a home, or a year down the road, you know you're going to get a home. Maybe in that time frame we could just simply build capital to either secure it, put it in a policy, secure it with a line of credit, or get unsecured debt. And as long as you have a debt tool, that's how I would go about paying that property off very, very quickly. Very quickly. Let's see. Sharonda, hello. Why would agents offer IUL? Is there any scenario where an IUL would be the better option? To my current knowledge and my current studies and my current education on whole life versus IUL, I have not personally ever met an individual or have ever seen a real policy for an IUL that has performed the way it said it was going to perform on an illustration. I have not seen it yet. So because of that, I have not been persuaded that IUL is the better option over whole life. Now, if someone comes along and they sit me down, they're like, look, here's my IUL policy, and it's been functioning properly, it's been getting the rates of return, and here's been the cost and whatnot, I would be very open-minded to that. I would listen. I would sit down and say, okay, let's see what you got, right? And what you don't got. But currently, looking at real whole life policies, historical performances based on, you know, the dividends and the cash value, the company performance, things like that, it's helped me say, yeah, you know what, I'm feeling more confident on this more than I do that. And I guess the only reason why it would be a better option is the fact that with IUL, they promote 15, 20%, 18% returns tax-free on these life insurance policies. So if that's true, that sounds freaking awesome, right? But will it perform? Number one. What are the costs? Number two. And will the premiums, will my cost of life insurance stay the same or will it go up? And typically with IULs, they go up. That's how they're designed. They start off lower and they go up. They do the same thing. You got the permanent life insurance expense and they add the term life. Their term life is called renewable term. So every time you renew it, the cost of that term life insurance expense will go up year after year after year after year. And if you keep funding it into your 60s and 70s, the older you get, the more likely you are reaching that mortality date, right? The mortality rates. So it's gonna get more expensive. And on top of that, it kind of works like a 401k in terms of the fees. So if if IUL has an annual fee of, let's say, 1%, hey, whatever you earn, we take 1% annual, not flat, annual, an annual charge, 1%. You have to understand that 1% will never be the same. It'll consistently go higher and higher. The more money you make, the more you pay in fees. It'll just keep going up and up and up. And so I guess the scary part could be, well, what if the thing doesn't perform one year? I still have to pay that 1% fee. I still have to pay my premiums. I still have to pay the term life insurance expense and any other cost that is thrown in there into IUL. And so it's important to read your life insurance contract. Although it's over 150 pages, you ought to read it like a book. Read it through. Very important before you buy any policy. I also tell my clients this as well, that I'm writing whole life policies. I'm like, look, as soon as you get the final illustration, the final policy package, like 100+ pages, read that sucker. Got any questions? Let's talk about it. Let's figure this out. Figure this out. All right, it's gonna take time. Let's see. Next question. Oh, we got 41 peeps in the house. Are you guys liking the new board? It's big, ain't it? It's like, you know, I like this. I'm mobile. You know, I'm mobile. I feel good. It's not hot in here. I love it. AC is blowing. Let's see. Let's see. Kenneth. Hi, Denzel. I'm working on getting a line of credit. Then I'll be reaching out for your coaching. I came across your videos after watching your collaboration with Steve Parisi from IBC Global. Nice. Good job. You know, I like how with Steve and myself, like literally my channel is prepping you for Steve. That's literally what it's doing. My channel with Velocity Banking, it's prepping you. It's getting you all nice and tuned up for infinite banking. And if you start watching his videos, oh man, you gotta really pay attention, cause like his information, it's like it just goes over your head a couple times, but then you rewatch and you're like, okay, I'm getting it, I'm getting closer, I'm getting closer. Let's see. Should we apply for a HELOC before we get the mortgage or wait? I want to have the least debt and best credit score when applying for the mortgage. Of course, doesn't everybody? So yeah, I would prefer to have a debt tool in place before I get a mortgage. That's just me personally. I would like to have a debt tool in place. Now, the great part about this is when you get a line of credit, you're not adding to your debt. You're adding to your utilization. You're not actually going into debt. So that's the cool part. It's not like we're getting a loan where the money gets deposited into my checking account and now I got to pay it back. That's debt. But when you get these debt tools, it's debt that's available. You're not using it all. So it's just adding to your utilization. Okay? Let's see. You know, I got to bring my stool so I'm not like hunching over. Getting old. Let's see. I'm in a very similar situation. My guess is that it's better to fully finish moving into the home, starting the mortgage, then get the HELOC and start velocity banking. Yep. Christian, good question. I would get the mortgage first, secure that. Okay, cool. We got everybody, you know, giving their thoughts. If you are in the process right now, then no. Okay, all right. Let's see. Anyone got any other questions? IULs are a ripoff, according to Wink 11. IULs are a ripoff. All the money you contribute goes where? Question mark. Only the policy covered goes to the beneficiary. I switched to term immediately and had to pay a penalty, but worth it. Ramsey got this one right. Yeah, I would agree with Ramsey on if you have a IUL and the thing was designed for death benefit, because that's the thing, guys. It all comes down to how the agent designed the policy. It almost doesn't matter as much as the quality of the company of the life insurance. It's really the design of the policy itself. If you bought an IUL policy strictly for the death benefit, you are overpaying for death benefit, period. I'm gonna be right on with Dave Ramsey. You are overpaying for life insurance if you bought an IUL policy strictly for the death benefit. You're throwing money away. It's terrible. You might as well get term. If you're looking at the infinite banking concept, you could potentially, I think there's a way to do it. You can roll over the thing into a whole life and avoid a lot of fees. Let's see. If someone has an 800 credit score with 0 debts, how much personal line of credit do you think a credit union would give? 20K? That depends on each bank. They have their own rules. So, you know, I've seen credit unions that say, hey, if you have a 650 score or higher, we'll approve you for a line of credit. And then there's other banks that are like, we want to see 700, we want to see this. So you have the credit score, which is great. The second thing they're going to look at is your income and the amount of debts that you have, and they'll weigh it, and they'll see. Depending on which credit union you go to, the credit union might only have a max of 15K on a HELOC. So you want to make sure that you do find a credit union or a bank that offers a credit line up to 20,000 or much higher, so that there's no confusion. So that boils down to like a bank thing. Let's see, the next thing. So what did we talk about so far? Financial planning, right? We want the velocity banking. We're doing infinite banking. Some people in here are 10Xing and investing in real estate, are business owners. You're in the stock market. Save for growth, invest to multiply, build the kingdom. Build it, okay? Know your 4 major numbers. Here are all the debt tools that you could possibly get right now in the marketplace. Here's the debts. Here's how you should list out your debts. And literally you map out the different cases. Really, right? Because all you have is debt snowball, debt avalanche, velocity banking, and the other strategy is rather than pay off debt, some people will teach invest the money. So instead of paying off debt, they say take your cash flow, invest it, and the risk, there's risk to that, of course, but there's a lot of gain where you could potentially, make a whole lot of money and then pay off all that debt in sort of like a lump sum, right? So let's take a look at this real quick. Let me, because I've been watching some YouTube videos. Some people talk about this. Now, I don't agree with where they're investing money, by no means, because they're talking about like, investing in, I don't know, qualified accounts and whatnot. And what's up with this board? It doesn't want to erase. Oh yeah, I'm gonna have to get my spray. So I'll take care of you later. So let's see. So you've got debt snowball, debt avalanche, velocity banking, and then there's, the strategy of pay off debt or invest. Now, I particularly would never go that route because I don't have the education to do such a move. So if you come across a video and you're watching, a guy with, 1 million subscribers or whatever, very influential, saying, hey, instead of pay off your debt, invest the money and be a millionaire. Yeah. All right. Well, how does it relate to you? Do you have the education to invest? And if you do not, how much does it cost to learn to invest? And that's where you can get yourself in a pickle. So instead of that concept, which I do not exactly approve of, I don't really do that for my clients unless the client themselves has the knowledge to invest. And I can't argue with that. If you tell me you know how to make $1,000 a day in Forex, I'm not going to argue with that. That's going to go way better than velocity banking, period. If you tell me you can bring in an extra $1,000 a day through Forex and you have $500,000 in debt, and if all you did was per month take your cash flow per month, throw it in Forex, and make 1,000 on top of 1,000 on top of 1,000 each month, and you just keep adding to the principal, I would tell you go that route. Especially if you know it, why not? So my suggestion, that something I would say, is pay off debt or 10x. That makes more sense to me because now I'm in more control of how I'm investing. I'm in more control of that. So me personally, when I was 20,000 in debt, I decided to 10x. I had to figure out a way to go from making 2K a month to 20K plus a month, because if I could make 20,000 in a month, I could pay off all my debt in 1 month, right? Or like in 2 or 3 months, if you go from 2 to 10, 10 to 15, 20K. I mean, that's nothing. That's super fast, right? So that would be my only argument against people that talk about pay off debt or invest, and they say invest instead of pay off debt. I would say, hey, instead of pay off debt, why not 10x? That makes more sense. I can go a lot faster. And then I position myself for these credit lines that much faster. So that's what I would say. All banks offer secured line of credit, question mark. Can you give some options? I do believe, crypto, that most banks, not all of them, but most banks do offer secured line of credit. So if you go on a website, so Wells Fargo offers personal lines of credit, HELOC, Regions Bank, TD Bank. I'm naming the major ones because it covers all 50 states. I don't know what state you are in, so I'm just talking about the major banks. that do offer credit lines, those 3 banks, if they offer unsecured, of course they offer secured. So that's going to be your way of handling that. RJ says, Google that info. It's simple. There you go, RJ. That's what I tell them. People tell me all the time, oh, I live in Staten Island. I live in Queens. I live in Jersey. And I don't know where to find a credit union. I'm like, look it up. Google credit unions in freaking New Jersey. Type it in just like that. Credit unions in freaking New Jersey. I promise you, you'll get a whole list. There's no shortage of credit unions, federal banks, state banks, nationwide banks, military credit unions, union workers union credit unions, and all. I mean, there's no shortage, guys. There's no shortage of these banks. All you got to do is you start with your state, and because you're in your state, when you Google knows your location, right? And then they're going to see where you're at, and they're going to provide you with the different credit unions that are there. It's not that hard to find. It's very simple. The difficult part is the approval, getting approved. That's the hardest part, getting approved. And then I have a bunch of videos that help you increase your chances of approval. I cannot guarantee, but I can improve your chances of approval. Okay? Kenneth says, appreciate your sharing nuggets of knowledge. Yes. So somebody said that they're a new subscriber and will become a client soon. Wonderful. So that was the one thing I didn't even talk about, was the programs. So here we go. I got 3 services that I created this year of 2019. The Velocity Banking Manifesto. It's not a book, it's like a video manifesto program, course, online that you can get access to, and I'm going to show you in a minute. It's currently $70 one time, and you get access to the program for life. So that's my offer. It's an offer right now, and it will expire December 31st, midnight. Okay? Cut you off. And then in 2020, it will cost $97 per year. It'll be an annual service. Okay? The second one is my Velocity Banking Masterclass. Currently, right now, you can buy it for $697, and you get the manifesto for free, for life. Make sense? In 2020, it'll be $997 per year, annual. So at the $697, you'll get the manifesto for life, and you'll get access to the Velocity Banking Master classes that I've already done in 2019. You'll have access to that for life, and you'll have access to the 2020 classes for life as well. Okay? And then if you wanted to, re-up in the following year, you would, just buy it again. And then I have the Velocity Banking Bundle for $11.97. This simply is one-on-one coaching. So the one-on-one coaching costs $11.97. Currently, right now, you will get the master class for free and the manifesto for free. Same thing. You'll get lifetime access to the manifesto, lifetime access to the master class for 2019 and 2020. The one-on-one coaching, what I'm doing, because those that sign up early, is right now, it's 15 months long of coaching. So you'll be able to book a call with me on a bi-monthly basis. So every 2 months, maybe by exception, for some reason, like let's say, for example, you scheduled a call 1 month, but you weren't able to make it. Well, you could easily reschedule that same month or or maybe a week down the road. I'm not going to make you wait 4 months to, to book a next call. So there's the exception to the rule. The rule is that with the one-on-one coaching, it's bi-monthly phone calls, but obviously there's some exceptions such as that, like you're not able to make a phone call, or say for example, you come to the call unprepared. It doesn't always happen, but sometimes people come to the phone call thinking that I'm a life coach, and they tell me their whole story, where they come from, and I love it. I love it. It's, tell me your story. I want to get to know you, but I also want to serve you, and I can't serve you if you don't come prepared. And what I mean come prepared is knowing your 4 major numbers, doing what I said about the debts, knowing your debt tool or the strategy to get to the debt tool, having a financial plan, financial goals, like all these things I want you to have in line, because I'm not a financial life coach. More so, I'm a teacher where I just simply say the first letter of the alphabet is A, and the second one is B, and the third letter of the alphabet is C, and then 1, 2, 3, right? So that's the way I teach this concept. It's not you need to have the mindset of a millionaire, and you need to think about how you're going to live your life. And I'm not one of those guys. I'm very, very, straight to the point, because I find more value in solving problems than creating illusions that get you motivated on the call, but you don't actually do anything. And there's too many programs like that out there. So, I want to be as real as possible with that. So yeah, that's what it looks like in 2020. Now, I'm gonna switch it to my computer if I can do it right. I'm gonna try, see if I can do it right. But let me see if there's any other questions. Mr. Ramos, I know you're a big fan of Cardone. What are your thoughts on Cardone Capital? I personally have not invested in Cardone Capital, and here's why. Grant Cardone, I met him in person. I met the man in person. I asked him a question in front of a crowd, and he told me not to give him any of my money to him. That's literally the way he said it. He was like, you 10x'd? I was like, yeah, I 10x'd, man. I'm feeling pumped, And I was giving him my testimony. I said, hey, do you recommend me right now at 23 years old, would you recommend me put money in Cardone Capital, or do you think I should just 10x again next year? I went from 0 to 10x in my income. Do you think I should just redirect all the money back to me, focus on how I'm delivering my products and service to the marketplace? And he simply said, you don't got to give me no money. Keep 10x and keep doing your thing. Save 40% of your income, build that up, and then, we talk about real estate. We'll get into that, So that's the only reason why I have not invested in Cardone Capital yet. My opinion on it, though, is I think it's awesome what he's doing. I don't think it's a REIT. It's very different from a REIT. I think you are an actual partner in the deal. So you get all the benefits of what he gets. So you're able to claim more things that a REIT wouldn't grant you. So I think there's some advantage to that. And I think the way this world is moving in terms of people who are building brands is, what if your favorite actor in the world had a piece of multi-family real estate, 500 units or 1,000 units, and because you're a huge fan of this actor, periodically they spend time there. They have a condo there or something. The way this world is moving, in my opinion, is that more and more people are gravitating towards influencers and leaders of all sorts. Financial wizards, real estate people, like anyone can be like an actor now in terms of the popularity. You don't have to go you know, to the stage, you don't have to do movies to be famous now. You could be famous just by like discovering the best fitness routine or doing what I'm doing, making videos on YouTube and blowing up, going viral. So let me ask you a question. What if you knew that your favorite actor lived in that area, they own that real estate, right? And you move there. Well, I think that's kind of like the idea of Cardone Capital, is people know 10X. You say 10X, you think Grant Cardone right away. So if you see that this land is owned and operated by 10X, the Grant Cardone, and you're a huge fan of them, you're gonna see those properties, those units are going to fill up a lot faster than any other multifamily property unit location. And so if you are on the other side of that, as much as you are a fan, but you're also an investor, I think your funds are going to perform very well. I think your investment is going to perform very well. So that is my take on Cardone Capital. Let's see. There was another question that I got. Do you personally sell IBC policies? Yes, I personally do that. In a few more months, I will be finished with my velocity banking and will be looking to move into infinite banking space. So yes, I do personally, help you, get the numbers together and write the policy. But for the most part, I'm teamed and partnered, secured with IBC Global. So when you click the link in the description, you'll be sent right to IBC and you'll talk to someone. And I always say this, they know more than I do about infinite banking. So maybe they could work a little faster than I can, where I do like to take my time when I'm working with clients, because typically the policies that I'm working with are much bigger funding. So I want to make sure they're done right, because that's my name, that's my reputation. So last thing I would want is to design a policy for, a 60-year-old mom who wants to do infinite banking and it's not designed properly for her. I would hate that. I would hate for that to happen. So I do take extra time in how I do that. So I'm not going to be as fast, because I'm actually going to read the policy that you're not going to read. I'm also going to ask the questions that you're not going to ask, and keep doing it like that way. That's kind of like the way I've been operating so far. Renard, hey, I like it when you do live video. I've been following you since the first video. I already have an IBC. I already have IBC. I contacted Steve. He knows you referred me. Keep up the good work. Thank you, man. Appreciate it. Appreciate it. Sharona says, everyone doesn't know how to Google. It is more common than you think. We live in a world that tells people, stop, and coffee is hot. LOL, give them some slack. No, you're right. You're right, Sharonda. You are right. All right, so I'm gonna go sit in my chair now, and let's see if I can do this. So I'm gonna share my screen. Oh yeah, I think it worked. Let me know if you guys see my screen. I think I did it. Cool, so here is the Velocity Banking Manifesto. Here's how it currently looks. It's a bunch of different playlists, videos that are in order, step by step, in parts, breakdowns, Q&As. It's all in order so that you can practically, fundamentally learn velocity banking, and even to the point where you could probably teach it to your family, right? And then if you go there, you're able to download the Velocity Banking spreadsheet. And then this is a client that created a Velocity Banking calculator, which is super cool. And I share that with all of my current clients. Now, here is the new program, what I'm currently going to be switching over to. The platform is called Kajabi, and my computer is like making a loud noise that scares me. I don't know if you guys can hear that, so forgive me. It's like breathing loud. But here it is. We got, so far I created 3 different products. This is very, very brand new. So I don't really know what I'm doing yet, but I have someone that's helping me. They're gonna make this thing look pretty. But here's what the Velocity Banking Masterclass looks like currently. Is we've got the, let me go to the uncut. So currently I've done 20 classes. I haven't uploaded the one I just did today. There's supposed to be 22 classes total, and the last one is tomorrow for my students. And then going into next year, for those that did sign up for the class and for those that will sign up for the class, I'm going to be doing bonus classes that I'll add here, and then makeup sessions that I'll add here for a lot of my students that did not make it to the class. They weren't available for any reason. So I'm going to have extra time for that. The next thing is I went ahead and edited the master classes so that it's broken down a little bit better, cuts out all the dead space, you know, so you could watch it raw, uncut, if that's how you like to watch things. Or if you like Denzel, get straight to the point, because I ain't got time for this, then it's edited nicely. Okay, so that's the master class. And then, I don't know, I'm playing with it. Velocity Banking Kingdom Network, VBKN, how do you like that? I don't know. But basically, this is going to be a community. It's literally going to be like a Facebook group where you'll be able to type your questions in, make a post, I think. So I'm working on that. I'm really excited about releasing that soon. And then here is the new manifesto. Why is it not working? Oh, there we go. Here's the new manifesto. And this is big. So, all about the line of credit. Any question you could have about a line of credit, it's not only here, but it's in order. So I'm putting things in order for you to learn. And the different terminologies and where to look. But these are all my favorite Velocity Banking scenarios that I've done in the past that are on the YouTube channel. But again, it's in order. And then additional videos that are not on the channel will be added. So basically, if you're a Manifesto member, you're going to get access to all this new content that I put out, and you'll be able to be a part of that. And then I break things down. I have Velocity Banking for millennials, so young people, recommended credit unions and banks. These videos I've made are based on clients that I have that actually have a line of credit with the bank that I mention on any one of these videos. And what I went ahead and started doing was making videos based on each state, right? Each state is how I kind of basically did. So, you know, if you don't know, credit unions in the Big Apple, that's the NY and the C, New York, right? But for everyone else, they're going to be called by their name. So only New Yorkers will know. Oh, Big Apple? Yeah. That's right. And then the next one is Velocity Banking and Kingdom Authority. This is also for young people, where I literally start with an individual at the age of 16 to 18 years old and I'm going to track their life all the way to like age 30 and up, right? So right now, I've made 13 videos, and they're currently, I didn't put the age, but in this video, they're like 20. So I'm going very step by step, year by year. This is something that is great to teach your kids. This is powerful. And let's see, the next one is Velocity Banking Step-by-Step Breakdown, where I take one scenario, I take one case of a mom, 4 kids, works at the post office, and I break down her entire debt-free timeline. And I think I'm on part 13 for her. So as I work on these cases, when I'm done, I edit them, and then I add it to the manifesto for you to, watch and learn. And then here's all about the kingdom. That's the spiritual side of building your finances and adding purpose to your life. And this is big. What to do before you start velocity banking. So many people jump the gun. They apply for a line of credit, get denied, they get discouraged. So watching this will definitely help you prepare that in advance. And then here are frequently asked questions about velocity banking. I can't tell you how many times I get asked the same question over and over again, But what I go ahead and do is I will literally make a video, right? So here's what happens. I get, I get leads, right? People reach out, right? And then I see a question, and then I'll make a video about their question. I might even shout them out, and I put it in here, right? So there's a lot of questions that people have, and I basically, put it in video format. I answer you by video. So that's why it takes me so much time to respond to a lot of you that are filling out forms, is because I literally take the time to answer each question. And my hope is that you'll watch my videos on YouTube, because I most likely answered your question. And then the next one is the infinite banking concept. This is my personal experience around the infinite banking concept and how I choose to leverage the strategy. This is a famous, famous topic, velocity banking with a credit card. I'm building this out as well. And then lastly, giving your money purpose. Why it's so important to give your money purpose, right? And the next thing that I'm doing on top of all of that is I am creating partnerships with individuals that create content on YouTube. And they're going to give me their content, and I'm going to host their content in the manifesto specifically for the people that purchase the manifesto program. And it's going to be additional content that's just for my clients, just for all my Velocity Banking Kingdom citizens that, work with me. Is as I'm learning and growing, what I do is I team up with individuals that already know something. They're already an expert. And so here is one topic that I will add into the manifesto, commercial real estate investing. Okay? And it's not going to be me talking, because I don't know anything about commercial real estate investing. But I know someone that does, and not only do they know it, but they create content, step-by-step things that they can teach you. And I'm basically going to add it in there so that as you're paying off debt, as you're building your life insurance policy, you're building your cash flow, you're building your credit, you can then watch these different programs, these different strategies that I, Denzel Rodriguez, am learning as well. And then you'll be able to learn it with me, and then we team up together, right? So the next topic that I'm going to add in here is business credit building. We can call it that. I have another gentleman that creates content around business credit. So far I got a commercial real estate investor who sells commercial real estate and is learning from, I think, the top guy or one of the top guys in commercial real estate investing. And so that's going to be really cool. And then I got a guy that does business credit building. So that'll get added little by little. And then I have another lady that I wanted to team up with that does Airbnb. So it's just different strategies. Just different strategies that I want to be able to throw in here that I don't know personally, but by association, helping other clients, that could be huge. And so here's how it'll look like when you actually, you as the individual. So like I said, it's naked right now. I don't know who that guy is. It's naked. So it'll be me, right? And then, it'll have like different stuff. But here is how it'll actually look, like broken down into categories. And check this out. You'll be able to, let me go to this one. So you'll be able to all right, click here, start here, be able to start watching, and you can mark the video as complete when you're done, and then you can personally, type something. And so it's just going to be very engaging, right? It's going to be really, really engaging for you to learn, and it's a ton of fun. Tons of fun. So any questions on that while you're looking? And by the way, let me open up so I can look at the questions that you guys are asking real quick. Boom. So let's see. Forgot where I left off. RJ, thanks. My 2020 is going to go well, Lord willing. IBC Global and Denzel really have provided info that made me level up my game. Seems like it's better to just pay for the higher MEC if you plan on doing infinite banking for real estate. It does. I like that. Denzel, I'm having trouble going on the manifesto login. All right, please send me an email so that I can provide you with the login. So currently it's this, okay? And then January 4th is when I'm gonna release this, the beta. So people will start getting access to it on January 4th. That's my birthday. So I'm releasing it on my birthday. All right. Let's see. So yeah, let me turn it back to reality. Bring it back here. Get away from that loud computer. It sounds like my computer's gonna explode. It's making all this noise. I don't know if you guys heard it. But I think that's everything, guys. Any questions at all? Let me know before we close out here. I hope you liked, getting like a deep dive in my Velocity Banking Manifesto. I'm basically taking everything that's on my current YouTube channel and all the videos that I've recorded in addition to what I put out on YouTube and just meshing it all together, putting it in chronological order so that you can learn this stuff really well. And so like I said, January 4th is my birthday. Okay, turning 24, and that's when the program will release. Program will be released, and that'll be a lot of fun. Like I said, it's going to be on Kajabi. You're going to have your own, login, account. I think you'll be able to, like, you know, have a username and like a picture maybe even. And I think there's like so many different things that I can do to make it like super engaging. So it's gonna be very, very engaging, the manifesto. Because unlike when you comment on the YouTube channel, I don't know who I'm talking to because some people have some crazy names and it doesn't match their real name. So on here, it'll be your real name and I'll know who you are because I can go in my back office and see, oh, look, Joe, oh, look, Billy, oh, look, Selvin, yeah. Boom, they've watched 50% of my content and they have a question on this. Boom, 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 answer that real quick, you know what I mean? Because I see that they're committed and they're engaged. And then the community, people who do know velocity banking, that do know infinite banking, that are getting results, that are killing it, you guys can offer support and help as well, okay? So to wrap things up, I hope this video was very helpful. All the links, all the information is in the description below on the video, so you know, you check that out for yourself. Velocity Banking Manifesto will release on January 4th of what I just showed you. What you saw was just the beginning. There's gonna be way more. My goal is to have 10,000 hours of material in there. I believe right now I have 400 or 500 hours, maybe, probably less, probably 300 to 400 hours of material, which is a lot. I mean, come on. But 10,000 is just, you know, I'm trying to 10x, right? And go way above and beyond. Above and beyond. And yeah, my birthday's on the 4th. If you want to get me a present, hey, I love gift cards. I love food, you know, so give me like a food gift card anywhere. You know, I like the nice restaurants, you know, Monty's, Fleming's, what are the main ones? Morton's, you know, the nice ones that have good steak and a nice potato and some nice macaroni, you know, the good stuff. And, you know, Amazon, I shop there. I like t-shirts. I like long sleeves and t-shirts that are comfortable. I like what's it called? What's fit? You know, not baggy, but it's fit, but it's comfortable. It doesn't make me sweat. That's what I like. So if you want to give me a present for all my Kingdom citizens out there, hey, bring the king some presents. King will return you some blessings. That's how it works out here in the kingdom, man. Hope you guys have a wonderful day. God bless. I don't see any other questions. Let me see. Let me do one more check. Let me see. I know Billy is in the comments giving a lot of value, sharing his numbers. Great. Cool. Crypto says going for secured line of credit. Good. You know, hey, for those that get denied for the unsecured and you have capital and low credit because you applied and got denied, so your credit just dropped. But if you already had low credit to begin with and it just dropped even more, then getting a secured line of credit might really be worth it. I mean, it is worth it. It's not worth it. It is worth it. It's just, it's better when it's unsecured because I don't have to back it up with anything. I can just start leveraging the debt. But when it's secured, the benefit is that the interest rate is going to be lower. Like, I've seen interest rates as low as like 2.6% on a secured personal line of credit, or 3, 4, 5. So that, hey, you know what's cool? You don't lose the cash. You leveraged it, you paid off bad debt, you saved money on interest, you have it for a year, you graduate out of the secured into unsecured, and you're on your merry way. Remember this, the first debt tool that you start with won't be the last one. So you're gonna be graduating, moving up with it, all right? Hope this was really, really helpful. Love you all. Have a blessed day.